Bitcoin is pumping again and everyone is euphoric because the 4-year cycle is alive and well. However, I think there's some doubts we need to talk about here, and if you want to find out more about this, stay in this video. But before we get into things, a quick disclaimer. Nothing I mention in this video is financial advice. I only do this for educational purposes because I often see that a lot of people throw out the 4-year cycle and go, oh yeah, if you just stick to this, you're gonna be super rich with Bitcoin. This is not the case. Just as with Bitcoin, you also have to do the proof of work. So stay in here if you want to learn the fundamentals about the 4-year cycle. If not, you would have to go and watch another video. Okay, but simply explain, what is the 4-year cycle actually? If you take a look at the Bitcoin price on a log scale, not the regular price scale, the log scale, and you insert the timings of the halvings, you'll see an interesting phenomenon. The Bitcoin halving, as we know, takes place every 4 years, or to be exact, every 210,000 blocks. And with it, it reduces the block subsidiary by half for all the miners. The idea is very simple. By doing this, you are actually reducing inflation. And with a reduced inflation, you make the asset more appealing for people who use it to hedge. Whether that be to hedge against hyperinflation, to hedge against a failing fiat currency, or whether to just use the asset for the next 10, 20, 30 years as a savings tool. With the recent halving, measured by the stock to flow model, Bitcoin is actually the most scarce asset on earth, even scarcer than gold. And as we know, gold has actually been a great protector for central banks, but also for individuals against failing and uncertain times. Therefore, if you have something as the 4-year cycle with these halvings, these events get a bit hyped up by the community, because so far, for the last couple of halvings, we've seen that the price followed the halving. It also followed the hash rate, who was also increasing after the halving, which makes sense. You need to secure the network more. Once the miners actually get less rewards, they need to work harder for their coins. So therefore, you need to increase the security of the network to make it more competitive and also secure the whole thing. And through these myths, you've actually seen that a lot of people just blindly followed halving 1 to halving 2. And whether the price pumped or dumped, I'm not going to care. I'm going to buy in here, I'm going to sell here, and do all of these trading things. However, if you now take a more broader look, you would actually also see that every different halving has its different timelines, from the days it took to reach a new all-time high, and also from the days it needs to reach those all-time highs in different currencies. Just because we measure everything in the US dollar as the world reserve currency doesn't mean that Bitcoin may reach a new all-time high in other currencies faster or slower. So therefore, there are 3 things for you to know with the 4-year cycle. First of all, it's a comparison that follows the price on a log scale, laid over with the halvings, and takes each cycle between these halvings, between these 210,000 blocks, as its own cycle. Roughly, because everything takes 4 years between these cycles, there has been this phenomenon where Bitcoin pumped, and it then released a bit of pressure going back into the bear market. Therefore, within these 4 years, you will always see a boom and a bust cycle. And you can use this simple model to determine in which area of the market we're currently in. If we're reaching new all-time highs and highs just keep getting higher and the lows keep getting higher as well, you're heading into a bull market, meaning it's a very good time to be in the ecosystem because everything is increasing in price and therefore you're getting rewarded if you got in early enough. However, if you now look also at the downside of that, there will be a phase where the market is correcting and you're heading towards a bear market with lower highs and higher lows. Therefore, the 4-year cycle is actually a great model to take a quick look at where we are at the market, but to not use this model as a choice of whether to invest something into Bitcoin or not. Rather, if you actually take a look at how Bitcoin has been evolving on a much, much broader scale since the beginning, you'll end up realizing that it's been on quite the tear upwards. And because it's decreasing in inflation on one end due to the halvings, those maintain the scarcity and the hardness of the money itself. And on the other end, value is increasing with more demand each cycle. It's actually the best tool to save your hard-earned time and cash in. So rather than actually following, a trading signal or anything like this, take a look at the halving cycle, understand whether we are in a bull or a bear market, and the probably easiest choice for every investor out there would be to then set up a savings plan, because you can utilize Bitcoin scarcity its value increase over time. It's actually gained value on average 45% each year for the last decade, and use a simplified method to gain exposure to Bitcoin. If you need help, the Relai app is the best stop for you to set up such a savings plan. So what do you think? Is the 4-year cycle just a myth on social media that everyone is hyping up? Or is there some merit to it, and can you actually use it to understand in which situations of the market we are? Again, it's not an investment vehicle, so you shouldn't use this with a graph just to determine if you're gonna invest more into Bitcoin or not, but it helps you understand where in the time of being we are right now in the market and what you can actually do. If you have suggestions, if the 4-year cycle is dead, or if you're just getting started, let me know with a comment below, and I look forward to seeing you in the next video.